Where is Tesla stock going to be in 5 years? Well, I'm going to take a bearish stance today. I think the stock is going to be trading lower. And in fact, I think shares are going to be below $100 per share 5 years from now. So let's talk about why. Now, let's start with Tesla's business model. At the end of the day, Tesla is an automaker. That is where they generate most of their revenue. That's where most of their investment has gone, is into making vehicles. The problem with that is they are losing market share and their sales are actually declining in the auto business. In the first quarter of 2025, the company's auto revenue declined over 20%, and their margins have been dropping for years. Today, Tesla's gross margin in the auto business is worse than a lot of the legacy automakers, and that was not the story that investors were told about Tesla leading the EV space. On top of that, Tesla is having to reduce prices, and even with those price reduction, hasn't been able to sell all the vehicles that they could make. This is the fundamental challenge for an auto business. You have to keep your manufacturing plants operating 24/7 to be able to be a profitable business. That's why typically auto companies are valued very lowly, but Tesla isn't. I'll get to that a little bit later. The other segment that has been growing significantly is the energy business. This is where Tesla is selling power walls to homeowners, power packs to utilities, but this is a business that is fundamentally driven by subsidies in the US. And subsidy changes that are working their way through Congress today may take away potentially all of the profitability in that energy business. Competitors are also coming into the US market in particular, and import tariffs on Chinese batteries, which is where Tesla gets most of its batteries from, are going to increase their costs and reduce those margins in the energy business in the future. Energy has typically been a commodity business, not a high growth, high margin business. I think eventually we will see the same thing at Tesla. But what investors have really focused on over the past few years has been their artificial intelligence investment. That starts with FSD, or full self-driving. The robotaxi is supposed to be coming in June. Those are early steps and far from scale. It's also unclear what the safety of FSD will be when it launches as a robotaxi, and whether cameras only and powered by artificial intelligence will be the right strategy when other companies have used redundancies and more sensors than Tesla has. And the robotaxi space is not without its competition. Waymo is scaling. VW is working with Mobileye. Toyota is working with Waymo. GM acquired and is folding in its Cruise technology, and it is working with NVIDIA to provide chips and their operating system for autonomous vehicles. So there's a lot of competition in the robotaxi space and in autonomous driving in general. Then there is the robot, or the Optimus robot that Tesla is making. That is an uncertain market. Elon Musk thinks that could be a business that's worth trillions of dollars, but we simply don't know today whether people want to buy humanoid robots, what the functionality will be, and what the payback will be. Will Tesla be able to build a profitable business in robotics? That is unclear today, but investors are putting a lot of stock in what Tesla is building and Elon Musk's vision of that robotics future. But let's go to Tesla's performance, because this is what a lot of investors look back. Tesla is one of the best performing stocks over the past 5 years, up 496%. But if you just go back to the beginning of 2021, so about 4.5 years, the stock is about flat and has been very, very volatile. Operationally, Tesla's performance has been a little bit hit or miss. There's a ton of growth that happened in 2020, 2021, and even into 2022. You may remember that's when automakers canceled a lot of their chip orders and vehicles were undersupplied, particularly in the US. Tesla actually raised their prices during that period of time. That's why they had extremely high margins and free cash flow, and that flowed through to higher net income in 2022 and 2023. But the last couple of years have been a completely different story. Supply has been a challenge, so has demand, and they have had to reduce prices to be able to sell vehicles. That has had an impact on the company's profitability, and revenue has even declined since 2023. The one bright spot in the business has been that energy business that has become a very high growth business and a very high margin business. But we need to keep in mind that those subsidies that have driven that profitability may be going away as early as 2026. That also goes for the regulatory credits that Tesla has benefited from in the auto business as well. So translating past performance to future performance is going to be very difficult for Tesla. Now, I want to start with the bear case, because there are 3 things that I think investors need to focus on if they're looking at the downside for Tesla. First, we know that the auto business is struggling. Sales drop in the first quarter of 2025. That was partly because of new vehicles that are coming onto the market. There's a lot more competition, partly because of Elon Musk himself, and partly because consumers are just shying away from buying Tesla vehicles today. In Europe, for example, Tesla sales have fallen as much as 50% depending on the country, while electric vehicle sales overall have risen. So Tesla is losing market share really rapidly. Something similar is happening in the US, and China, which was the one growth market in 2024, also looks like it may be in decline in 2025. The second point is that FSD is an uncertain product. Elon Musk has been talking for a decade now about people being able to allow their vehicles to drive themselves around. Remember, Tesla vehicles were supposed to be able to drive themselves from LA to New York. That was years ago, but that has not happened. And now Tesla is launching this robotaxi service in Austin in June. That is to catch up with a lot of competitors who have reached the market with not only autonomous vehicle technology that has been commercialized, but it's been commercialized with no safety driver and with full commercial operations. Tesla has not shown the ability to do that. Elon Musk thinks that they can do that, but until that projection becomes reality, investors are putting a lot of faith in Tesla's development and ability to build technology that has not yet been fully proven. And the third thing is simply Tesla's valuation. As I'm recording today, Tesla's price to earnings multiple is nearly 200, and their price to sales multiple is over 11. A traditional automaker is going to trade for around 0.2 to 0.3 times sales. This is typically a very low multiple business. Price to earnings multiples typically hover between 4 and about 8 times. Tesla is many, many multiples higher than that. So unless they're able to prove that some of these new technologies and these new products like FSD, robotaxi, and the Optimus robot are going to be big, growing, and highly profitable businesses, it wouldn't be surprising to see the stock fall to a more normal valuation for an auto company, which is far, far below $100. Now, on the flip side, there is a bull case for Tesla. Elon Musk is going after very, very big markets. If he's right and the robotaxi business is a winner-take-all market, that is a huge market potentially worth multiple trillions of dollars. Humanoid robots could be exactly the same. We don't know how much demand or what the economics will be for humanoid robots, but if Tesla can sell millions of those robots each year, that will be a very big business and will be worthwhile for long-term investors. The market obviously believes everything that Elon Musk is selling, and if he is right, the bulls will continue to be right with Tesla. So what's my prediction? I think in 5 years, a lot of these things that are projections today will actually become reality. And that's why I think we're going to start valuing the company based on fundamentals and not just the story about the future. The auto business will likely continue to struggle. Electric vehicles are becoming an increasingly competitive space. Tesla doesn't really have any software or cost advantage over competitors. So that will likely be a commoditized business in the future. That means not a lot of growth and not a lot of increase in margins. FSD, I don't think is going to be a winner-take-all market. I think there's going to be a lot of competitors. And Tesla still has to go a long way to prove that FSD is safe for full autonomy. The energy business is likely to come down from its highs today, not only not grow nearly as much, but also be a much lower margin as those subsidies come off. And this becomes much more of a commodity business like most of the energy businesses today. And from a valuation perspective, that premium that Tesla gets will likely decline. And if Tesla goes from a price to sales multiple of 11 today to a more normal price to sales multiple for an energy or an auto company of between 0.2 and 1 times sales, that means the stock will likely be trading much, much lower, potentially as low as under $100 5 years from now. Now, what is your price target prediction for Tesla? I have obviously taken a bearish stance, but many investors disagree with me. So let me know what you think in the comments section below. And don't forget to check out fool.com/invest for the top 10 stocks to buy right now. Thanks for watching, everybody. See you here next time.